Welcome to Polaris-Live, conversations on the U.S.-China relationship and its global impact, as seen through the eyes of experts from around the world. This is your host, Sarwar Kashmeri, and I want to specially thank our viewers to this program as we begin our fifth, can you believe it, our fifth year. This non-commercial, user-supported channel brought to you live in conjunction with the Foreign Policy Association of New York. Viewers may ask questions using the bar on the right-hand side of the screen. We have two guests on the show today, Dr. ZHOU Mi from China, Beijing, China, and Mr. Marc Chandler from New York, Wall Street, United States. They will tackle the headline issue of trade, currencies, and what's happening with each country's economy. So Dr. ZHOU is Deputy Director, Institute of America and Oceanic Study, Chinese Academy of International Trade and Economic Cooperation. He is widely published, including more than 700 articles. He has been responsible or taken part in more than 200 research projects to support the decision-making or consulting for a wide range of ministries, local governments, international organizations, and enterprises. Mr. Marc Chandler, Managing Director, Chief Market Strategist for Bannockburn Global Forex. He has covered global capital markets for more than 20 years. A prolific writer, speaker, Chandler appears frequently in the financial media, including Financial Times, Wall Street Journal, Barron's. He shares his insights frequently with commentaries on CNBC, Bloomberg, CNN. His publications include Making Sense of the Dollar and Political Economy of Tomorrow, a best-selling book. Welcome to Polaris Live, gentlemen. It's so very nice to have you with us.
Thank you.
Let me begin by asking you to briefly tell us, what is the state of the economy in your country after the U.S. tariffs came into force? So let's start with you, Dr. ZHOU.
Well, it's a very interesting question. We are seeing that the world is changing so quickly, especially after the tariff has been enacted. I think it's a little bit different if you compare it with China and other countries, especially those countries not included in the BRICS. So you have reached agreements with many other countries on the certain tariff rates, but for China we have some suspension. So this is a little bit different when compared with the status of the tariffs. But if you are looking at the data, we have just published the data for the first 7 months of this year economic performance, and also we have published the data of the trade for the August. So it's a comparatively, if you're looking at the economic situation, I would say that China's economic is still very resilient. It is one word I want to use to describe this economic performance.
And the word is still prevalent. Is that the word that you want to describe?
I think it's resilient. Resilient is the word I want to use to describe. Yes.
Excellent. Excellent. Thank you. Marc, over to you.
Yeah, no, thank you. Thank you for that quick overview of the state of the Chinese economy. In some ways, I'd say the same thing is true about the United States, ironically. The resilience of the U.S. economy, I think many economists recognize that the tariffs are really a tax on consumers. Some of them may be borne by businesses accepting narrower profit margins. But as we sit here today, the U.S. economy looks like it's still growing above what the Federal Reserve says is trend growth, about 1.7, 1.8%. However, most recently we've seen a deterioration in the labor market, which is likely to prompt the Federal Reserve to resume its rate cuts, starting perhaps as early as next week.
So are you both saying that the tariffs have had very little impact so far on damaging the economies? And I'll start with you, Marc, and then Mi, I'll turn to you.
It's funny, there's a novelist who said that, if you want to tell a happy story, you have to know when to end it. And And I think that up until now, I'd say that the impact seems marginal, partly because the tariffs announcements are not really the same thing as the tariffs being implemented. There's a lot of exemptions, and two of the US's largest trading partners, Canada and Mexico, are still largely protected by the free trade agreement. However, we are seeing, I think, signs of some prices, import prices, especially durable good prices, rising. And I think it's a question of time before the tariffs have a greater impact on slowing the US economy. But up until now, I'd say the tariff impact has been mild on the US, whether we see it in inflation, whether we see it in the real sector. The big challenge is the weakness of the job market, which is separate from the tariff issue. It has to do with immigration, the cutback on immigration, both legal and illegal, as well as the lower demand for workers coming from businesses. We are seeing a slowdown of hiring and of labor force growth.
Mi,
over to you.
Well, yeah, I would say that trade data is a very important, thing that you have to look at. If you're looking at the August trade data, China's growth of the foreign trade is a little bit slower compared with the first 7 months. So I would say that, generally speaking, I think that the tariffs are really impacting the performance of the foreign trade, but it's not just like from one aspect. I want to say two things. The first one is that China has already been in that so-called tariff war with the United States for maybe almost 9 years or 8 years after the first term of Donald Trump. So the tariffs before the so-called reciprocal tariff is already more than 30%. And the Chinese enterprises has already been through this kind of fairly long time of coping with their trading partners in the United States. And the second, I want to say that the tariffs are only raised by the United States. We are still, especially the enterprises, they are diversified their trade relations with other countries. Well, what is even more important, because Chinese government are really active in trying to promote the domestic consumption, and the consumption is really big in support for the economy development. And this month, for the August, it has been the third consecutive month of the increase of the import and export both. So I would say that although the tariffs are really harming the international trade for Chinese companies, but I don't think that they have stopped the room for the development of the economy. We have so many new areas or pillars that we want to support for the economic development.
I wonder if I could just say, I wonder if
go ahead, Mark.
If we could just look a little bit closer. I mean, I think that many in the United States, of course, in Washington, but also we see this in other centers, are concerned of I'd say that not just that China's export prowess, because it seems quite clear Chinese exports, as you say, have continued to hold up fairly well as China has been able to diversify away from the largest market, the US. But I think that the other challenge, I think, is on the import side. And I think that many people are concerned that because of the hostile environment that China finds itself, that it wants to be more the import substitution strategy, if you will, the Made in China 2025 general thrust. I think it makes China more reliant on its own production rather than on importing semi-finished goods or parts. And I think that this leads to the part of the tension between, say, not just China and the US, but China and Europe, China and even some BRIC countries like Brazil, I think, are concerned about some trade imbalances. But it doesn't seem to me yet that Chinese officials have really responded to that concern yet, no?
Okay. Do you wish to reply to that? Do you wish to reply to that, Mi, or can we move on?
Okay, I can have a short reply quickly. So sure. I think that it is very important for us to try to do more things to reduce the risk of over relying on the United States side. But this import substitution only happened in some critical technology like the semiconductors or some of this technology, we have to buy the things from United States. In other areas, we're still having so many collaborations with our trading partners. Maybe the reasons why we are seeing that some of these tensions are happening between China and South Korea, I think that is also, when we're looking at the commerce of the US, they are trying to change the ways of giving the permit to the South Korea's companies in buying the equipment and the raw materials from United States. So I think that is a kind of issue we want to deal with, because we are not just trying to let enterprises to do everything by themselves. We are helping them to have a better, to understand about the market and not trying to do more over competition with each other. And that will not just a case to harm the relation between China and the other trading partners.
I want to, forgive me, but put you a little bit on the spot, both of you. And I want to tell us from your perspective, Mr. Marc Chandler, I'd like you to tell us, in your view, what are the two glaring weaknesses in the Chinese economy? And then I will turn the microphone over to Dr. ZHOU to ask the same question.
Sure, thank you. I think that from the outside, from thousands of miles away from Beijing, it looks to, I think that we in the United States, I think, ought to be sympathetic to what the Chinese call the involution, the excess capacity, the surplus investment. And in my work, I think it derives from the type of market economy that China has. It's similar in this respect, I think, to what we used to call the Rhine model, Germany, Switzerland, that Central Europe. And the key to me here is the reliance on bank capital to fund corporations rather than market capital. For example, for every dollar that a US corporate will borrow from a bank, it will take two from the capital markets issuing bonds and stocks. This leads to a type of capitalism focused on short-term profitability, quarterly earnings. The Rhine model, which China in some ways has adopted, is a bank-centric type of capitalism in which the banks are more conservative. They're about relationships between the lender and the borrower. What this means is that Chinese companies have access to patient capital. And like continental Europe, this leads to a focus on market share, competition for market share rather than profitability. This allows, on one hand, longer-term investment plans, more patient capital. On the other hand, it leads to this overinvestment. And in the U.S., we had a similar problem in the late 1800s, and it was resolved by doing a couple of things. One was exporting, which China is doing. But the other thing that it did in the U.S. is it fostered combinations, centralization and concentration, mergers and acquisitions. And so in the U.S., many of the industries, even today, are dominated by a few companies. We call it oligopolies. While in China, it seems it's a much more vicious, ferocious type of competition that leads to weak profitability, which does not stop the businesses from growing. They still have access to this patient capital, bank capital, and the idea that as long as your market share is strong, you can still be able to stay in business. So to me, the overcapacity, excess investment is a first big issue. And the other issue, the other challenge that I'd see from the outside, again, is in the US, we have the Treasury bond market. The federal government has a huge bond market, which is the key to the dollar's role as a currency reserve. Central banks don't just put dollars in reserve, they put US Treasury bonds in reserve. China, it seems to me, has done almost the opposite. The state and local governments are where the big bonds are. The federal government has a much smaller bond market. And I think that what this has done is it leads to debt stress levels in the provinces, in the regions. And it doesn't, by not having a large central government bond market, it makes it more difficult, I think, for corporations, but also for China's ambitions to have a stronger international currency.
Let me turn over to Dr. Zhou. And you can reply to that, but I'm more interested in having you tell us your thoughts on a couple of weaknesses in the American economy. Please go ahead.
Okay. So I agree with you that Mark has mentioned some of these big challenges that Chinese enterprises and also the market is facing. So it is true that we are not the perfect model of the development, but I think that we are trying to make it, our little bit more transparent and more loose environment for the companies to develop at first. And gradually, I think that we will in the future, we will have a more acquisition and merger in China, and that is definitely what has happened in some of the sectors, as the home appliances like the electronics. When I was reading in the college, it was over competing with each other, but now there are very few of them. So I think that it still needs some time to have a better allocation of the resources, but I don't know whether we can do it smoothly. As you mentioned, the second challenge is coming from the debt issues. It's really a problem that we are dealing with, and I think that from last year, the central government is trying to give more, supply for the debt that they can get from the local governments. So I think they are really a good suggestion for us to understand about the worries, especially from the market side. As for the US, I think that let me just mention two kind of challenges. The first one is about the tariffs. I think the tariffs is one of the very powerful tools that the US government is now using. Well, they still have a lot of uncertainty about whether the tariffs can be legal or whether it can be collected by the administration. So, as the Treasury has mentioned, if it's illegal, it will be returned to the other countries or companies. Well, that will definitely give a big shock for the treasuries, the asset or their kind of structure of the balance sheet. Well, the second, the second issue is coming from the tariffs. It's not only about the price. In my understanding, that is something to do with supply chains. So many companies like the wholesalers or real retailers from US side, they are going to find some alternative from other countries instead of China. I think that is definitely feasible and reasonable at the first time. But if they are trying to pick another suppliers, it's not that easy for them to find a reliable producer or suppliers. So it's definitely will raise the prices even higher. That's our cost of maybe have a better or more impacts on the inflation. That is the first one. And the second also coming from the debt issue. We all know that the national debt of United States is very high, and that cannot be solved by the big and beautiful act. So just lifting the ceiling of the debt will not resolve the problem. The problem is coming from the structure. Maybe it's one of the complementary relation between China and United States. As Mark have mentioned, that it's almost the opposite by the two sides. That we have sold a lot of things to US, and we have bought many treasuries from US side. That keep it sustainable. If US want to reduce the deficit, I think that we will have no money to buy more treasuries. That will having more impact on the balance of the treasuries, and I don't think that will be a good phenomena for the investors. Maybe not only for the capital market.
Thank you. I really appreciated that both of you have kept this at a high level. It was a sensitive issue for me to bring up. But there's another question that ties into especially what you said earlier, Mark. The Financial Times is reporting that China is prepared to reopen its domestic bond market to major Russian energy companies in a shift of policy that reflects deepening diplomatic and economic ties between Beijing and Moscow. So, Mr. Chandler, how big is the Chinese bond market compared to the Americas? And is this a signal move, you think?
Well, I do think this is the development of China, we call the panda bond market. That is foreign companies issuing RMB denominated bonds in China. I think is an important step. It's unfortunate from of course, from the United States point of view that it's Russia as a driver. And of course, in Russia's case, it's really only two large companies that really have, that looks like will have access. But I think this is a promising development. I think if China's, in order to internationalize the RMB, one of the ways would be similar to what the US did. And that is by opening up the bond market, the dollar bond market, so that foreign companies and foreign countries can issue dollar-denominated debt. It's an important, say, pillar on which the dollar's role in the world economy sits. As China economy becomes increasingly important to the world economy, I think it's a positive and constructive development that China's panda bond market opens up. So I think this is a good development. I think that, you know, there's in the United States press, there's a lot of reports saying about how President Trump wants the Nobel Peace Prize. And I think that his perhaps unintentional, the solidification of the China-Russia alliance, and now with India joining apparently as well, I think that leaving aside the different wars that are going on in the world, that this achievement between, you know, China and Russia have fought each other over borders. China and India have fought each other over borders. And now the three countries seem to have a new phase in their history. And this, I think, is surprising, is probably unwelcome from the United States, but I think that President Trump has a lot to do with that.
So, Dr. ZHOU, I'll turn over to you.
Yeah, I mean, you know, the internationalization of RMB is always what we want to do, but I don't think that is the case that we want to trying to make it more influential by signing the agreement with Russia. Actually, I don't know that message you have told me about this kind of you know, openness to Russia stakeholders, but I understand that we are trying to set up or kind of organize as financial institutions and the SAO, the Shanghai Cooperation Organization mechanism. I mean, in this kind of areas, we have a lot of more issues to do, not only just for the trade, but also for some of the financial areas. Well, we know that, you know, United States have some different opinions about Russia, about any countries to do business with Russia. But I think that we have a very fair and very clear statement about what we are trying to do. We are not just trying to destroy the welfare of another countries. We do not just trying to judge the rightness of the certain behaviors, but we respect the enterprises. So I think that this kind of movement of opening our financial market is always there. We opened our market for different sectors, including the bankings and also the finance areas of insurance. After we fulfilled our commitments in WTO, so actually in the recent years we are exploring more channels to deal with that, but we are not so hurry. So if you're looking at the pace of China's opening up in the financial areas, we are a little bit more cautious because we know that the over opening will bring us more you know, impacts instead of the benefits. So for the financial market openness, I would say that we welcome you know, the investors no matter from which any countries. So I think that is definitely the basic rules. We are not just trying to discriminate, especially the companies, even it's coming from United States.
So let me just follow up on that a little bit and ask you very directly. Do you believe, as a lot of the Western financial market papers opine, that China long-term wants to replace the US dollar with the yuan as the world's trading currency?
I don't think that is, you know, in the short term. As you mentioned, in the long term, we know that definitely the currency of one country is a symbol of its influence. I would say that whether currency can be appreciated is based on the people who want to have it or do not. If we are able to provide the RMB as one of the intermediaries for the international trade and the investment, I think that's definitely good for us. But I don't think that we can do it in the short term. We have to respect the people's willingness. Even if you are looking at China, recently we signed the agreement of the swap of the currencies between the European central banks and also the Swiss central banks. We are still trying to facilitate mainly for the international trade. But for some other countries like Argentina, I would say that is also a kind of help for them to overcome the short-term impact of inabilities to pay back their debts.
And so, Mark, before we get off this topic, can you quickly tell us where in heck is the euro in this picture, dominated by the dollar and the yuan? Does it even rise over the horizon as a global currency? There were these great expectations and so on. Can you briefly fill us in on that?
Sure. I think that the most authoritative source of data on central bank reserves comes from the IMF's. They publish it quarterly with a quarterly lag. And if you look at that, and it's publicly available, you'll find that after the dollar, the euro is the second most used reserve currency. It's about half of the size of the U.S. So call the U.S. Call it the mid 50s or so, and so that puts the euro around 20-25% of global reserves. And so in some ways then the dollar and the euro are roughly 3/4 of global reserves. And so I think that the role of the euro has increased over time. I think that what makes it difficult now is just evaluation. You know, the OECD, the Organization of Economic Cooperation and Development, have a model of purchasing power parity. And by that measure, the euro is about 50% undervalued. And so this affects how we calculate then the value of the euro as a reserve currency. But if I'm right in the big picture that the dollar's begun a multi-year decline in value, the dollar index, a basket that the dollar trades against major currencies, peaked in 2022. We're 3 years into what I think is a bear market for the dollar. And as the dollar declines, the euro's share of world reserves will increase. The RMB's share of world reserves is still relatively small and can be accounted for not exclusively, but two major sources. One is the inclusion in the SDR, the IMF's special drawing rights, a basket of really official money, so to speak. And the other source of demand for the RMB as a reserve currency seems to have come from Russia when it was cut off from the dollar zone. But also remember that after the invasion of Ukraine, not only did the US, but Europe and the Swiss National Bank, I should say Switzerland, also froze Russian reserves. And so for Russia to move into the RMB to accumulate reserves, I think is part of the rise of the yuan's appreciation and as a reserve currency. Longer term, I think the problem is that the current account, China's current account, is still not, the currency is still not convertible, really, fully convertible. And that might limit both the private sector and the official sector from boosting the reserve holdings in RMB much more.
Okay. Let me take a moment to remind viewers that Polaris Live is entirely viewer supported. Based on feedback from our longtime viewers, we've made a notable addition to our programming. Beginning tomorrow, you will receive a professionally crafted one-page executive summary of each live YouTube episode on Substack, concise, accessible, and delivered straight to your inbox. Please subscribe to our new Substack channel today so you can start getting the summary for today's program tomorrow. I also want to assure you, as we continue to develop Polaris Live, that we fully intend to make it freely available, non-commercial channel sustained by our readers. If you find value, however, in our unique coverage of the US-China relationship and its global significance, please consider becoming an annual paid subscriber for $100. It's the model that keeps us strong and commercial free. Links to make this donation are already on our Substack page and will be on my website, kashmeri.com, by tomorrow. Thank you. Now, I would like to stay for a moment longer, Marc and me, on this currency issue and ask you, the value of the US dollar has declined around 11% year to date, 2025. The biggest decline in 50 years. Do you expect that to continue through the year end? So we'll start with me and then Marc. And short answers, please.
Well, I don't think that the trend is caused directly or only by the market. Actually, the market have some expectation about the value of the US dollars. I think that many of these investors are still seeing that US dollar is not so strong, especially for the in my understanding, for the policies of the government. Well, the second reason coming from this administration's US government, especially Donald Trump, is trying to devaluate the US dollars. I think it's kind of policy pressures, and the signals are pushing the US dollars to devaluate even more. I think that's as you mentioned.
Yes, I share that view of the dollar decline. I would just change the causes a little bit. Out of all the things that drive the foreign exchange market, $7.5 trillion a day turnover, I think politicians' wishes are not very salient. I think that ultimately what drives the dollar lower is a belief that U.S. interest rates are falling. And because exactly what Professor had suggested, that the climate with the tariffs, I think, raised concerns about the U.S. brand. And so I think that while many countries and companies are still tied to the dollar, I mean, whether you buy soybeans, whether you buy oil, well, almost most goods that you trade in are still invoiced in the global economy in U.S. dollars. But I think that the discretionary part, how much what you put into your reserves right now, it seems quite clear that that people are concerned about the U.S. brand, the U.S. commitment, and some of this discretionary money might be moving away from the dollar. But ultimately, I see the dollar's decline as largely cyclical. It's still, by the OECD's measure, still terribly overvalued against all the major currencies, except perhaps the Swiss franc. And I think that the dollar moves, the foreign exchange market moves like business cycles in very large cycles, which is one of the reasons I like the foreign exchange market. The cycles last for 5 to 10 years, and we're just getting done with a dollar, sort of what I would call a dollar super cycle, a bull market. And I think the bear market's begun, and that'll be fueled by the slowing of the U.S. economy, narrowing interest rate differentials, and of course, Federal Reserve rate cuts.
The point is frequently made by experts that China is an export-driven economy, largely, and the U.S. economy is internally driven. So tariffs can bottle up China, if I may use that phrase, but America can keep chugging along. You say, Marc?
Yeah, I don't quite see it this way. I mean, I think that you're right. I think that many people in Washington and former officials who still seem to carry the administration's water continue to talk about China as being export-oriented. And I think this is a mistake. I think there's a misreading of the facts. I think the facts will show that China exports about 20% of GDP. That's less than Canada. That's less than Germany. That's about half of what Germany does. It's half of countries, smaller trade-oriented countries like Singapore. So I do think that it's a I think what confuses people is just the sheer scale of China. If at least, I mean, we could debate about the exact measure, whether it's bigger or larger than bigger or smaller than the U.S., and which measure, purchasing power parity or whatnot. But the idea is that China is still not really as export driven, but the sheer scale. I'll give you an example. Mexico exports about 90% of their auto production. 90%. But nobody's crying that Mexico has excess capacity. China does not export anything close to 90% of its autos. I just think that the sheer scale, I think it's sort of like what Napoleon said. I think he was quoted saying something to the effect of, China is a sleeping giant, and when it wakens, the world will shake. And I think that in the last 20, 30, maybe 40 years, that China has come back to the world stage. And I think the sheer size of it is intimidating, even though it's not really export-oriented the way other countries in the OECD or other high-income countries are.
And so is China, just before I come to you, Dr. Zhou, Mark, is China just a different model that we are trying to grapple to understand?
I think that what confuses people is communist ideology. I find if you put aside the ideology and the rhetoric and the language that people use, that China is really following what seems to be the East Asian development model. Whether maybe beginning with Japan, South Korea, Taiwan, other nations in the area who have relied on exports in an early phase of their industrialization. And so I think China largely fits into that general model that we're already familiar with. But again, I would say that Japan does have Japan, like China, also has low level of exports relative to GDP. And I think the key, and this is what I think US companies, European companies, and especially Japanese companies have done well, and that is facing with protectionism from overseas, faced with an overvalued currency, they have explored a foreign direct investment strategy. That is, US exports are small compared to the sales by affiliates of US companies abroad. After World War II, the US companies pursued a direct investment, building plant and production facilities, the supply chains abroad. After the protectionism in the US and to some extent in Europe in the 1980s, Japanese companies have done the same thing, moved production offshore, so that now many of the Japanese cars that we see on American roads are made in the United States. Okay. China has been slower to move in this direction, partly because I think that countries like the United States have made it very hard for Chinese companies to pursue a direct investment strategy, and instead are still then more reliant on exports. But I think going forward, we're going to see Chinese companies follow the same strategy as Japanese companies and American companies before it, and move production facilities so that Chinese companies make cars, say, in Brazil, or perhaps one day in Mexico, or other countries in East Asia. It's not just simply avoiding US tariffs, but it's part of a global strategy, I think a rational strategy, a rational response to currency strength, protectionism, trying to avoid exports and substitute those exports for direct production in those foreign countries.
So, Mi, I want to let you respond, and let's spend a few more minutes on this, because it's terribly important, not just from a currency and trade point of view, but a geopolitical point of view, because so much of the American perception, and I would suppose Chinese public perception, is based on what they read. And if they think what is not correct, then it affects the geopolitical relationship between the two. So I'll let you respond to this in any way you wish.
Well, we have published several kind of very clear statements, like the white paper by the Chinese government, that, when we're looking at the white paper that just published this April, the first chapter is all about what's the relations between China and United States. I think that is very clear that, as President Xi has mentioned several times, that the relation between China and United States is beneficiary for both sides. So we were not just trying to take over US side as a leader of the world. I think that is totally wrong. We are trying to make the companies more opportunities, to give them some support, as Mark has mentioned about the Chinese companies investing in the United States. I think that we have proposed the going global strategies things earlier at the start of this century. I think that they're beyond, the opinions from Mark. I would say another reason is that Chinese companies are still very weak. So compared with the foreign companies, they are not so good at the experiences of dealing the business internationally. So as one of the principles, I think that the Chinese government never interfere with the enterprises' decision, especially in another country. We are just providing them some suggestions about maybe it's a time for you to try to go global. Maybe it's a time for you to know more about what can be done in the foreign markets. So I think that is definitely what is happening, no matter whether there is tariffs or not. Many Chinese companies are already trying to establish their supply chains around the world. And from another side, I think there is another differences. I would say that many Chinese companies are trying to do more to support the local companies to have a better supply chains. So, the relation between China and many developing countries are, not like the United States. We are the developing countries. We are trying to have a better integrations and also the supply side collaboration. This is based on the idea of industrialization. Like we have proposed for the Belt and Road Initiative. It's a kind of ideas that China have experienced this kind of success in the past decades. So we want to share our experiences with our trading partners. If they are going to do more to improve, have a better development, I think that they can have a better industrialization and urbanization. This is the idea. So in this part, I would say the Chinese government is not doing too much. We are just giving the information and trying to make them know more about what can be done in the internationalization.
As we start running to the end of our program, we still have a few minutes to go. I wonder if you both would like to ask each other a question. If not, we'll move ahead. But if you would like to ask each other a question, please do so. Mark?
Sure, I'd be interested in hearing from Dr. ZHOU that about how he sort of sees the, maybe not so much in the near term. When they teach Americans how to drive, they say aim high in your steering. Don't just aim for the pavement like 10 feet in front of you, but aim down the road. And so maybe you could share with me how you would think that if we were going to chat again, say in 10 years, what do you think that China's economy would look like from a world perspective? Obviously, it'll be bigger. Do you think it'll be more open? Will the current account be open? Will China have the financial power on a global stage to match its economic power?
Well, yeah, I hope so, that we can do more to have a better development. But I don't think that is decided by China. I mean, that we are having more trial of the cooperation with other countries instead of just deciding everything by ourselves. So actually, for the financial areas, I would say that China will definitely open more in the coming years. Like you can find that from some of these special economic zones in China, they're still trying to do more for the better openings. But I don't think that openings will be just, a kind of the only dimension of the development. We are trying to be more cautious about the risk prevention and also trying to reduce the impact for the people. As one main factor I want to say, or main trend I want to say, that is, the artificial intelligence development and appliance in China. We are seeing more companies are trying to do that to improve their quality of development. I would say that would be the trend for us to have a better performance. And another characteristic I want to say for Chinese economy is that we have a better integration of the domestic market. That will definitely have a much stronger abilities for sustainable development, and that will also bring so many new opportunities. As we always say that we want to share our opportunities with our friends, no matter where they come from. So definitely this one word, we definitely will open our market even more.
Well, my last question to both of you. forgive me if this sounds a little blue sky, but I would like to ask both of you, if you had a couple of minutes alone with the presidents of the United States and China. You know, Polaris-Live believes that our relationship, the one between the United States and China, is the most consequential in the world. So if you had a few minutes with these people, what would you tell them in one or two sentences to do to improve the relationship? And let me start with you.
So I want to say that, the presidents can only be, just in this term, but we have to consider about the consequences of the decisions. So if we are looking at the future, maybe the market will have a much more ability to reflect about the long term of cooperation, because China and the United States, we are the pair of the countries. We cannot just try to destroy the relations, and it is helpful for us to do more to not only benefit both of us, but also the rest of the world.
Yes, very interesting. I wonder if what's happening is this transition right now. You know, the U.S. after the really since the end of the 19th century has pursued what we call the open door, global trade and free trade, sort of like the heir to the British, to Northern Italy, to the Dutch, to the Portuguese trading empires. And rather than empires with colonies, it's really this commercial empire. And I think that free trade works best when you are confident that you have the most efficient economy. And I think the U.S. recognizes that it no longer has the world's most efficient economy, especially in the commanding heights that Dr. ZHOU talked about, like AI. And so I think the U.S. is adopting a sphere of influence policy. And just yesterday, there was press reports discussing a draft of the new national security plan coming from the U.S. Defense Department. And it will suggest that the U.S. focuses on the homeland, the U.S., and the Western Hemisphere. I think this is the key behind President Trump's talk about Greenland, Panama, even making Canada the 51st state. This is about the U.S. securing a sphere of influence. And what I would encourage the leaders to discuss is, can we make this transition smoothly? Will China now, as a very efficient economy, will it now become the champion of free trade as the U.S. was in the 20th century and Britain in the century before? And I think that this juxtaposition could lead to a greater respect for each other's red lines. And I think that this is an important, that the commercial rivalry, even the U.S. and the EU, the U.S. and Canada, the U.S. and Mexico, where we have a North American free trade agreement, there's always tensions. Trade and tensions aren't opposites. They sort of complement each other and are more like twins. But I think that what's more dangerous is the military reach, whether it's the Philippines or the South China Sea, whether it's Taiwan, whether it's even other places in the world, Venezuela, for example. And so what concerns me is that we need to, I would encourage leaders from both countries to develop protocols like the US and Russia developed during the Cold War, to avoid accidents, to keep lines of communication open, to exchange defense personnel as well as high-level exchanges in governments, to keep the dialogues open and gradually come to respect each other's red lines.
Well, gentlemen,
yeah.
Sorry,
may I
go
ask
ahead.
A question?
Absolutely.
Okay. Yeah, Mark, can you share me some of your points about the stable coins of United States, and do you think it will have some impact on US dollar's position in the future?
Yes, thank you. The stable coins are very interesting. I think I'm not sure that in the U.S., where there is a relatively transparent banking system. Currency is convertible. That limited capital controls, despite some talk that other types of capital controls may be coming. I think there's a greater use case for stable coins outside the United States, where countries such as Brazil, India, that have capital controls, that this could be a form of the stable coins could be a vehicle in which can bypass or can sidestep on capital controls. In terms of the U.S., my biggest concern with stable coins isn't really in the international usage, but it's really in what happens to the U.S. banking system. As people buy these stable coins, the stable coins will be backed by dollars, but that takes dollars out of deposits of banks. And right now we're seeing this a very close tension beginning to rise in the U.S. money market as the reserve levels under QT, quantitative tightening, begin falling. And we could see stress in the U.S. money markets as soon as September 15th, when we get the big tax date in the U.S. and the end of the quarter. But I think that if I were in Beijing and I was trying to think about how the global financial architecture is evolving, I would have a role for stable coins, stable dollar-backed coins, but I don't think that it is going to be a key pillar to the financial architecture that's evolving. I think, again, that it's primarily a use for non-Americans rather than Americans themselves. And many of the people who are already using dollars will just find it easier to use dollars rather than so it's a different element, but it's the same general like animal, if you will, and that's the role of the dollar to settle foreign trade, and it's sort of still the number one currency in the world.
Well, we'll have to leave it there, gentlemen. We have alas run out of time now. And I really want to thank you both so very much, ZHOU Mi and Marc Chandler, for that timely and instructive conversation. It was a pleasure to speak and learn from you. And I also want to thank our viewers from around the world. Please sign up to receive our program updates and alerts at my website, www.kashmeri.com. And a reminder that Polaris-Live will be back again next week, Tuesday, 16 September at 8:30 a.m. Eastern Time, when our guest will be a senior official from the People's Liberation Army, who will speak to China and America's partnership role in defeating the fascist threat of the Second World War and what may be its implications and perhaps promises for today. Until then, goodbye.